What's up, everybody? Welcome aboard to Trading Live with Bubba. It is Tuesday, the 4th of June, and there's nothing going on. Now, there's a lot of reasons why there could be nothing going on. You could be waiting for the jobs on Friday. You've got ISM services tomorrow. But personally, I just think that there's a big faction that still believes there's going to be rate cuts. Me not being one of them, I think there's going to be rate hikes. If the Fed is truly going to try to stop inflation, which is not their mantra, then there has to be a hike, not a cut. But as we look at the short-term charts, there hasn't been a real lot of activity. I mean, when you're watching and you're seeing the Dow trading under 4,000 contracts, you're seeing the Russell trading under 4,000, you're seeing the S&P trading under 25, and you're seeing the NASDAQ under 10, that's not enough action to day trade. Okay. Again, certainly there's opportunity, but I always worry about people trying to get involved, because when we stare at these machines, we start to see mirages. Okay. But we'll just take a look at our big stuff. We'll go back and forth as always. But as we look at the futures, you can see the S&P futures are in the middle of nowhere. Okay. They're right on the mean. If you look at the Bollinger Bands, which means that there's no real commitment one way or the other. They're an overall consolidation. So we're waiting for a reason to get involved. Yet I can't really find one here. Certainly, if I had to use my opinion, I'd like to be to the short side. I think the trend has turned over. However, there is no real evidence or proof of that. So why should I try to force the market? Because I'm never going to be smarter than the market. The market's absolute. It only trades off of order flow. The NASDAQ, very similar, dead in consolidation, kind of on a little bit of a support level. But I don't have a mathematical edge to make a trade here in the NASDAQ right now. So again, I say, why would I want to get involved? You know, there's enough opportunity throughout a trading year, okay, that you don't have to trade every day or every minute, okay? You can certainly set up longer term positions, which is fine. As you see trends changing, which I do carry. I carry swing trades, I carry position trades, I carry day trades as I'm, playing them. But again, right here, there's not much for me to do. Okay, I need the market to react one way or the other. I don't care which way it reacts. And of course, the Russell, very similar, right? We're looking at the same pattern repeat itself. Now, the Russell is getting a little bit oversold. So certainly you could look at potentially being a buyer. But again, I don't like the lack of true volume here. And if we go back to the short-term chart, look at this. You've got 1,800 contracts trading. I'm looking for 5,000. So I'm trading at about 1/3 of the normal volume. So to me, again, I don't need to be involved when the markets are acting in this fashion. And as we go back, look at the Dow, Yankee Michael. And of course, the Dow is closer to the oversold, which is why you see a little bit of bounce and why the Dow is a little bit stronger. Now, I want to go back to Friday, okay, when you saw that massive rally late in the day, okay? That was a pure short squeeze extraordinaire, okay? What happens in markets is they get everybody sitting around and everybody's short, and finally they go, wait a second, this is supposed to be going down, and suddenly you have people start to cover, and before you know it, they're running over each other trying to cover. And that is what happened. So the sell-off here the last couple of days was very predictable. But again, there's not enough activity. You can see that volume continues to decline. The volatility index, the VIX, a little bit higher today, but really not going anywhere. So we don't have a dramatic or a lot of reasons to trade. Let's just take a look and make sure that I'm not missing anything for us, which I didn't think I would be, because we're really not. Okay. Again, I'm not going to force a trade, especially when I'm teaching or I'm sharing information. I would never force. Sometimes I myself, like anybody else, I'm sitting here staring at the machine. I'm susceptible to making the same mistakes as anybody. But let's go and look at the charts that we watch every week together or twice a week together. And of course, Apple, very overbought, looks like it should be sold. And certainly I would be looking at selling potential call spreads here. Now, again, here you're waiting, and I don't know how aggressive I want to be today, okay? Because again, you've got a lot of data this week. You've got the ADP jobs tomorrow. You've got the ISM tomorrow. You've got the jobs number on Friday. So I would rather wait and hope that we stay up here versus trying to get in, because of course the jobs number will be very telling as to where these markets are going to go. Okay. Amazon, which is certainly turned over. It is a little bit oversold. I would certainly consider selling put spreads here. And I'd be more willing to sell put spreads on a lot of these things right now because the favorability of the market is still, although it looks like we're starting to trend lower, we still are higher. Okay. We're still close to all-time highs. So again, I would personally, I'm not going to do anything between now and Friday except for day trading, the positions I carry, and trade. See if I can find opportunity in the zero DTE stuff. Okay. Coin, again, in the kind of the middle, trying to reach up a little bit towards overbought, but not a lot going on here. Bitcoin's been very quiet. Meta, stuck in consolidation, you can see, is a very narrow range. So again, we know that Meta is going to break out of this range. We don't know which way and we don't know when. So as you can see, the Bollinger Bands, which we have been using here, they're squeezing tighter, which is making the standard deviation closer, which is telling you that something big is going to happen. We just don't know what it's going to be yet. Google has, again, held support here, getting a little bit of a bounce, but more or less hovering around the mean. So once again, where is my opportunity? Where do I see an opportunity or a chance to trade here? And IWM, again, very oversold here. I would have no problem selling put spreads for today. Okay. I would have no problem taking a whack at put spreads. In fact, let me just take a quick peek, see what they're trading at right now, see if it's even worth my while. Today is the 4th. Okay. And we're looking at 202. So if I look at okay, now here's the next issue. Okay. I'm not so interested in selling a spread for 20 cents. Okay. I like to get a little bit more credit. Okay. And because of the lack of volatility and the lack of activity, if we got a little bit lower, I might look at it. If I can get close to 35 or 40 cents, so really what I'm looking for is 35 to 40%. Okay. So again, right here, I would let it go. I'm not in a hurry to jump. I mean, again, you got a big enough cushion and maybe a little bit later, because remember, this is only a 4 or 5 hour trade. Okay. And we'll come back to this in a little bit. Moderna, which has been pretty wild. You saw they had a drug announcement. And of course, it exploded higher, which we thought should be sold, came right back down to support. And here we are, right tracing around the mean. Okay, again, I'm not really overly excited because, again, I go back to the lack of activity. Microsoft is in the middle of nowhere once again, looking to come down so that we could be put spread sellers or get long the stock. NVIDIA is, I think it splits on Thursday or Friday. I would stay away from this because, interestingly enough, when stocks are getting ready to split, buyers buy it like they're getting something for free, which you're not. You're paying $1,000 or $1,100, and when you get the split 10 for 1, it's going to be the same $1,100. Okay, so again, I don't know, but it's pretty much human nature. I would wait on this because, again, it has stocks that are going to split have a tendency to run a little bit, and the only real trade here to make would be to sell it, and I don't think that that's the proper trade. The Qs, again, hovering right around the mean. Okay. So you can see that the lack of opportunity in the markets are there. We're not seeing any real dramatic movement that we should be forcing ourselves into. Last night on my Monday night call, I said you would look at Square as a possible put spread seller. But again, I want to go back and remind you that with all the news coming out this week, I'm not going to be able to sell it for enough to be able to get out before the news on Friday. So do I really want to participate to try to make, let's say, $40, okay, on a one lot? So, maybe if I did 5, do I really want to risk 300 to make 200 on a news item that I have no control and no idea? So I think that that's something to keep in mind as well. The SPY, you're in nowhere's land. Okay. What do you want to do here? That's what you have to ask yourself. What do you want to do right here? I see nothing unless you want to potentially look at selling an iron condor. And I'm not a big fan of iron condors in general, except when I use them in my hedging model. So I would say to me, it'd be a hard pass. Tesla, just like Meta, it's going to make a big move. The direction is unknown. Now, again, certainly it doesn't look very good. The short-term trend is a little bit to the upside, but the longer-term trend certainly doesn't look very good. I would simply wait. I don't have a trade here that I'd really want to get into. Win, again, coming down to some oversold conditions. If it got down there, I might be willing to participate. And Zoom, again, up towards the mean. So you can see by looking at the charts, we don't have a lot of activity that we really want to play. So let's go back and just see if there's anything happening in our short-term stuff and see if there's anything worth looking at and we're trading. Okay, because again, remember, part of this trading game is the patience that you can exercise waiting for opportunity. You'll make more money. And what happens when you start to get into a losing streak, you start to give away that money, and then it makes it harder to celebrate the wins and make money because you're so miserable from the losses. So basically your goal is to try to get even instead of trying to make money. And I think it's important to understand that that's, the psychology of the trading is part of it as well. And my advice to you on a day like today would be to walk away. Either study your work, study what you're looking for, and not pay too much attention to the markets, because once again, I don't see any dramatic opportunities. And remember, there's 241 trading days. There's going to be plenty of opportunity. I don't want to start or waste my time when there's absolutely nothing going on. If I was still on the trading floor, I would already be headed towards the golf course right now. Okay. Because I don't see the opportunity. What I do see is I see putting myself in more risk and creating an overall problem versus the opportunities. Because when you have a slow drag on the markets with no volume, it takes away the opportunity, because traders, we are in a competitive business. Okay. We are competing against others. We can all win, but we are competing against others. So where's the competition here? How are you going to beat your competition? Your competition is not showing you any weakness at the moment. They're not showing you that they're panicking to the sell side or chasing up to the buy side. So where are you going to get your edge? And if we can't get on a 4-minute cycle, if we can't get a trade, okay, then what does that bode for the rest of the market? Because the action always has to start up in the shorter term charts first. So I think when you're watching this, you go, wow, what is there really to do? And I have to ask you, what is there really to do? And I don't think there's a lot to do. And I think this is where you have to really exercise your patience and your ability to walk away from the markets, because again, you can go into any commodity you want and you'll see pretty much the same thing. The dollar's a little bit oversold. Certainly, something to look at if you wanted to, but again, I'm not encouraging you to do anything. I'm encouraging you to take a pass. I'm encouraging you to say, let me wait until I see some either FOMO where they're chasing the markets up, or some panic where they're puking out and selling their positions. I think that's more important to learn and take from these markets. Certainly, again, I'm looking at the bond market right now. These are the notes. Overbought, but look at the lack of participation and volume. Okay. Is this really a market that I want to get involved with? And again, here, there's not enough movement. I mean, if you look at the entire move here, you're talking about, today's movement is about 8-9 ticks. Okay. And again, that's not bad if you'd have bought the bottom and sold the top. But since we don't buy the bottom nor sell the top, I think it's important for you to sit back and relax. Okay. The bond market itself, once again, very overbought, probably should be sold. But again, look at the lack of participation. So when there's a lack of participation, that makes markets more susceptible to what we call vacuum type of moves. Okay. Because suddenly in this slow, dull market, you could suddenly get a big order that could destroy you. Okay. And take you right out of a trade that you were thinking about putting on, because you're really at the mercy, because there's not enough speed or movement to the upside or downside. Doesn't matter. Okay. There's not enough speed or movement to the market that should want you to get involved, because you can get a sudden reversal. Like here, you get a sudden reversal, which we'd be a seller if we had a reason to sell, but it could explode to the upside too, because again, there's a very little participation in the overall market. And you have to remember that the market players are what really drive the markets. The order flow is what really drives the markets. And we're not seeing much of that. So again, you have to ask yourself, is it worth getting involved and putting yourself at risk, okay, over something that is really not as high of a probability as you like, okay? Coin flips, you want to do coin flips, go to Las Vegas, Okay, well, that's where I live. But you want to do coin flips, that's not the right way to trade. When you trade, you should feel that you have the edge to the market, not hoping that you have the edge, but you should be building in to your trading and to your style the advantage because of. And if this would pop up and give us some volume and maybe get us volume up to here, then we would maybe have an advantage on selling crude oil. Okay. If gold would pop up a little bit more and we get some more volume, there could be an opportunity. But again, you can see what I like to call the lack of speed in this market. There is no speed. There is no active trading. There's nobody rushing to get in or get out. Okay. So I think that you have to take all of these situations into your mind and say, where's my edge? Where's my advantage? Okay. So actually crude is popping a little bit. So let's see what happens here. Maybe we'll get something here. And again, I don't like to reach. Okay. But it could maybe qualify, and I could look at it, and we will take a look. We'll see if it indeed does. Okay. So certainly based on what I teach, the last 5 bars, this is starting to blow off. So certainly we could take a look at this. Okay, let's see what happens here. We've got about 30 seconds to wait for this bar to close. Then we got to switch over to the 1 minute. And gold is something as well. But I'm certainly not putting you in 2 trades today. Okay. Again, I don't see the advantage to be overly active here. I think that it's a mistake to try to be too active here. But I think you've had a pretty big pop in crude here, about 70 cents from the bottom. Okay, you're coming up to a little bit of resistance anyway. So now we'll go ahead and take a look at this and switch over. Okay, so now we know that our stop is going to be at 74.01 would be the normal math. But because it's right around a whole number, we're going to 74.10. Okay, you have to stay away from having your stops at whole numbers because you can bet on it that if they get there, they're going to go through it by 4, 5, 6 ticks, if not more. Okay, so we don't want to ever have our stops on a whole number. Okay, because it's like a magnet. Once it gets there, because all the market makers are going to run the stops. It's what I did. It's what I know how to do. And certainly it still happens, even though we have electronic market makers. They're going to run through that area because everybody puts their stops around the same place. So now we don't have to matter. The stop is 74.11. Okay. And that's just that's the regular stop, but we have no entry yet. We're still waiting and look at it go. Okay. It is still going higher. Okay. So we have no sale. Okay. And if we were looking at gold, which we did not, but if you were looking at gold, that's not a sale yet either. It's still going higher. Okay. So again, there's no reason. I just got an email. Watching paint dry. Yeah, no shit. So at the end of the day, this is what you're watching. And again, this is why you have to be more disciplined and more patient when these kind of types of markets are occurring, because you are not doing yourself any favors by becoming overly active in a market in this type of condition. Okay. So crude could be a sale here. Now, again, I don't know if I'll be here with you to the completion of this trade. I don't know if you want to take it. I'll leave that up to you. Your stop is 74.11. Okay. We don't have a trade yet. Okay. No trade yet. Okay. No trade yet. Okay. So we'll have to wait and see what it looks like and what it does. Okay. But it hasn't given us, again, the fact that the trades aren't triggering either is another warning sign. Remember, these are all warning signs that there is a lack of activity in the overall market. And I think that's something that you have to always be paying attention to. Okay. Where's the speed? Where's the action? Where's my trade going to come from? And right now you can see that there's still very little volume. Okay. Pretty much across the board. And, crude could be potentially a trade, but at this point, I've seen it, I've watched it, and it's moving at such a slow pace that is it being driven by anxiety or FOMO or somebody being forced out? And again, why should I try to get involved? I'd rather have the markets be more favorable to me. Okay. Even if I lose. Okay. Remember, trading is a sequence of math equations always putting yourself in the best position to be successful. Okay. And as I said today, I don't think those conditions exist good enough for us to want to be involved. And you'll always know the difference by how active we are trading and by how much we're willing to take some extra risk calculations, because there is enough business. I don't want my day to come down to one trade. Okay, whether I make money or I don't make money. I want my day to come down, if I'm day trading, to a series of trades that net me a profit when they're all done. Okay, I'd rather hit 66% and make 20 trades than hit 80% and make 2 trades. Okay, again, I'd much rather be active, and we're seeing crude is continuing to blow off again. And here's another one. So now you have another opportunity. But of course, we are now done for today. So we'll go with no trades today. Have a great day. Tomorrow you got ADP jobs and ISM services. Have a great day, everybody. We'll see you back here on Thursday.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc. All rights reserved. Member FINRA SIPC.